So this is weekly commentary 36. Now, before we go on to the charts, and we're going to start on the monthly chart, I want to show you guys something on the monthly chart. Let's go to Forex Factory's economic calendar, right? Now, this is going to be the week going into the next trading week from the 31st of October on Monday, right? We've got these orange folders on Euro. Now, a lot of people just give, mind to the red folders. And a lot of you, what you've done is you've only toggled the red folders on your economic calendar for this website. Have all of them, right? Even, orange folders, you want to consider them as well. That could just give you a small run on a high given that time of day, 10 a.m., right? Those things, they're still significant. Consider those. These are just, the larger swings that we're going to see in the marketplace, right? Now, let's go on to Tuesday. You got two red folders, and then on Wednesday, you have the big one. Now, I've been talking about November the 2nd on my social media for a bit, and the people that actually do their due diligence on what is on that date, it is the FOMC meeting, the last one for the year going into 2023. And this is the significant driver that I've been waiting for since the start of the month, right? Or the start of this month going into the month of November. And why is that, right? Let's go to the chart now and understand why. But before we do that, we also have the non-farm payroll, NFP, on the Friday because it's the first month of Friday. So we also have this. So it's a pretty action-packed week. Now, I want to touch on something as well here. Um, the people from America in the mentorship, you guys know what happens in November, right? Mid to the end of November, it's, the elections. Now, this, right, you see this website, it only considers economic drivers, but not political drivers. Now, political drivers, they're still, not as significant as the economic drivers, but when these political events happen, they do cause some sort of, they have a presence in the marketplace as well. Um, with the UK, it used to be Brexit, right? And Brexit doesn't, it never really used to show up here. It was just a thing of you have to be clued on when, a talk on Brexit or an announcement progression with, you know, exiting the European Union for the UK was gonna happen. So be very mindful of, November as a month entirely. It's a month of the year where a lot of traders I know, ICT specifically, and a few other traders, that are, well statused, they consider trading to turning their trading into a paper account just to preserve capital, right? Now let's go on to the technicals. Now on the monthly, what do you notice about these candles, right? Just I'll give you a second. Just look at the last, five or so candles, and what do you notice? You see every single candle, right? You want to see a candle's high get taken or a candle's low get taken. So let's go back five candles, like I said. So one, two, three, four, five. So we have this candle, and then this candle took its high, and then this candle took that candle's high. This candle took that candle's high. This candle took that candle's high. Now, what did this candle do all month? This candle's coming to an end. This is the month of October. What has this candle done? This is a pure consolidation. And this is how you know you are inside of a consolidation. Because the candle, and we're looking at the monthly candle, and you can use this as well for, the weekly to daily relationship, right? The candle is inside. I think retail call this an inside bar. What does this show? There is accumulation occurring within the month of October, right? The candle's high is not taken, nor the candle's low is not taken. So what does that show you? There has been no addition to the expansion of the range. Because if there was an addition to, the range or a retracement offered, the retracement would have broken the candle's low, or the expansion would have added and the candle would have exceeded the candle's high. However, you're trading inside of the range of September. This is very important to understand because now you have to, let's apply, the logical scientific approach we like to approach here towards the chart. We are inside, the range, aka we are consolidating. Now, the month of October, what comes after it? What is the accumulation for? We have to look into the future a bit. There is the FOMC meeting, and it is going to be significant. That whole week coming is very significant. NFP and the FOMC, right? Now, when this usually happens, right, there is usually a significant swing that occurs in the market. Now, we're coming to that point of the year where we're running out of time, right, given December, because December's there's a lack of, liquidity. There is a decrease in the volume by, large commercials. There is a month on the table, right, for a final run on a high or low, right? Now, I want to see FOMC overall go higher, right? They have a problem with inflation in the US economy. Now, have they admitted it and do they recognize it's significant? Uh, Not really, right? They don't really acknowledge it to be as significant. But nonetheless, the way to combat inflation is to hike up the interest rate. So as they hike up the interest rate, you would see a move greater on the DXY. Now, talking about interest rates, let's discuss this, right? So you see, this we added to the actual expansion on the monthly chart. If we look at the weeklies now, right? We swept the weekly low here, right? We swept the weekly low. And if we go to a daily chart, we're finding support inside of these two down close candles, right? In a bullish narrative, you want to find support at your down close candles. That is a clear indication of bullish order flow. This is an order block essentially, right? And we have that buy side liquidity pool. Now, I'd love to see the candles print higher and take out this high. And this was a correction done just before, FOMC. Now, likewise on the DXY, I wanted to see this weekly fair value gap trade into, right? You see how we take out this sell side liquidity pool, and now we had a candle up. You see this candle is indecisive to me, and I'll tell you when I avoid participating within the marketplace. You see here, the bias is not clear. Now, you could have a short-term bias in saying, I want to frame a long into this fair value gap, which is what I recommended to people as well on the Zoom I held on the Thursday night. I said for Friday you could frame the move into this higher time, this daily fair value gap, the long. Now it didn't quite get there, right? You could have got a portion of the move, but it didn't quite get into there if you're holding for that fair value gap. When I don't want to participate is in this, right? It's indecisive. There is no clear one way the market is drawing for. You see how we took out here and then we come back into this range, right? You see, like, if you want to apply, a retail thing, you see this is a clear consolidation, right? Forgive me for drawing that. We can see the move into this fair value gap. Now, I just anticipate to keep going sideways. The Monday, the Tuesday, there is a news event, but I am waiting for FOMC to show itself, right? This is a time where sitting on your hands will pay you. I'll tell you why. It is so much more logical to give a week or two away to the market and spectate or trade a paper account so that when it's clear, you have a bias for months, weeks, by just giving up a fraction of the time. In my opinion, is a fair trade-off. Right now, if we go to the weekly for the DXY, you see that it swept this previous low, right? This one, and it's coming back up, right? You see how it's still, you know, going back and forth. Even though this candle's body moves down lower, in my opinion, it's still back and forth. Given the monthly chart, we're inside of the other monthly candle, right? Now, I don't anticipate, you know, a reversal on the DXY. I have no reason to change the macro stance unless FOMC says otherwise. And this is a time of uncertainty to me. However, I'd want to see, you know, a final run on DXY's on the DXY chart, right? I want to see us actually work towards 120 in the future. The next candle, where is it likely to, chart to, print to? I have uncertainty in where it would, given the information that I have. We are inside a consolidation, right? And what happens inside a consolidation is back and forth. But given the macro stance in the future, I'm still anticipating the candles to print higher over them printing lower. Now, let's talk about the COT data, right? I have a problem with my, getting the COT chart up. You see, if I click this, nothing happens. Even when I click this, nothing happens. So I have to just do with this. So this is for the Euro USD, right? This is the ticker, right? If you just type this in to here, you'll get up this information. So as of the 25th of October, we can see the longs vs their short positions by the commercials. Now you see that the commercials are adding, right, for the Euro USD pair, they are adding to their short positions and they subtracted a minor amount from their long positions, right? And you can see that compare the two figures, 346949 and 440781, they are net short, sorry, because the short positions are greater than the long positions. And there has been an addition of 23,126 shorts. This is going into FOMC, right? Now, this tells me what? That Euro USD is the same thing, right? If we go to the monthly chart, it's an inside candle. It's consolidating within the range, right? And consolidating for what? It's consolidating for the Fed's FOMC coming. Now you see here we've traded up above a few candles highs if you go on a daily chart, right? You see we've swept this candles high, we swept this candles high, right? We're back into this candles order block, well this order block here, right? And you see how we had a, just get rid of this box. We had a move up, right? You see this candle, it was responsible for running this high and this high. And now we have that move down. If I see us trade through this fair value gap, right? We trade through it and we disrespect this as a bullish array. Like it does not hold as support. My eye is going to start going to these two lows here, this one and this one. I would frame, short positions to take out these lows and work my way back down to this low here. Given the COT data and given that I am bullish on, you know, the Fed's hiking the rates and I'm bullish on the DXY overall, right? Now, if we go to pound is a bit different. There is some sort of divergence given the pound. You see how it's still inside the range, however, it's very close. Now, here, there is a minuscule fair value gap, right? Now, I wouldn't touch this pair right now. I would not touch the GBP USD pair. I recommend trading Euro USD for the reason, right? For this reason. The relationship between the dollar and the euro right now is way more symmetrical than the relationship between the dollar and the pound. It is going to give you a much easier time using the DXY's relationship with the euro to frame your positions, on euro that's opposing to the DXY, right? Now, for the crypto guys, now it's again, you see how every single monthly candle, right, across the markets, I'm not sure for this one, no, it's not for this one. You see how Euro USD, pound, the dollar, Bitcoin, they're inside of the range of September. They're all accumulating, right? And you see how the last four candles, right, including this one, how they're just up, down, down, up, right? It's a consolidation now. Bitcoin on a daily chart has been consolidating, I believe, since July, right? Since middle of June. Now, FOMC is going to bring, some shaking to this market. Now, if I'm anticipating higher prices on the DXY, right, we've taken this sell side liquidity pool. Now, how I said on the euro, how we've taken this buy side liquidity pool, and if we can displace lower and disrespect this fair value gap here, the same with the DXY, we're taking out this low, right? If we can trade above into this fair value gap and disrespect that as a bearish array, then I would have my eyes at these highs here and I'll work my way here with FOMC. I am waiting for FOMC to show its hand. Now, some of you may not like that, and it's the impatience inside of you that will, get the better of you. You don't want to stand in front of the central bank. This, they own it. What we're looking at right now, this the Federal Reserve own it. Let them decide what they want to do with what they own, and we just need to collect the scraps, and we need to just trade a small portion and get off their back with the move, right? Now, I wanted to touch on something that I get a question about often. I get asked by a lot of you, so I thought I could just clarify in this weekly commentary. A lot of you have asked, when do you think I should take a funded account challenge? And you've asked if I recommend taking it at this time of year. My answer that hits all of these in the head is this. Assuming that, you found consistency on a demo, assuming that you have passed FTML trials and that you have a plan that you have been trading and it's working for you, and that you are mentally, financially ready, take the challenge if you have a clear bias from the higher time frame. If you don't, you will struggle. You will struggle taking that challenge. You have the benefit and the luxury of deciding whenever you want to take those challenges, right? You are not forced into taking any challenge. So why not pick the time to take the challenge when it's the easiest for you to trade in, inside of a clear bias, right? For example, taking a challenge, in this week here, very difficult, right? I can't, the range, you're just going in and out of a range. There is no daily expansion along, at this time, the middle of October. And people probably struggled on that week, right? Now, even this week, from the Wednesday, the Thursday, and the Friday, we traded up higher. And I also said it in the free channel. On the Thursday, we had the GDP for the US economy, and I anticipated, we're going to move back into the range for it. And why do you think I anticipated us moving back into the range for it? Because we took this low out, right? You see, we took this sell side liquidity pool out here. And I know that the market is going to consolidate for FOMC. The thing is this, right? You guys consider the price aspect too much. You overemphasize the aspect of price. You need to start emphasizing the idea of time more, because price is going to start printing given time. It's not time given price. It's price given time. Make a note of that, right? Now, what does price given time mean? We know that it's going to be locked in a consolidation until there is a reason or driver to push price. So why would it leave this consolidation until there is a reason for it to leave, which is the FOMC meeting, right? And it's like any other news event. Now, forget that this is a daily time frame. Let's say that you have a 8:30 news event for the US dollar, right? And let's put a box and say that this this is 8:30. This box, inside this box is 8:30. Let's say the midpoint of this box is 8:30. So we're at 7 o'clock around here. Are we anticipating, significant runs prior to the build-up of this significant news driver? No. Just from the free content alone, we know that what's going to happen. Before a significant driver, we will accumulate orders to then distribute. We have a reason to then distribute given the news event, the news driver. Now, The same thing is happening here. We are just accumulating for the economic driver, which is going to be the reason to distribute orders. Now, prior to that, right, and this is why it's interesting to me, we have run this sell side liquidity pool low, right? So we've run these. Now, sell stops have been entered into the market. There's been an entrance of sellers into the market. Now, this is in the build up to FOMC. There's only a few days, by the Wednesday, FOMC is going to have dropped, right? Now, you see how we trade up into the news event. That's what I care about. I get a lot of questions. How do you trade the news? What do I see the news as? All you see is this. The news, you don't factor in, get price out of your head. Think of time. All you see the news events are these, like this. The news events are just times, right? They're times and days, right? They are specific times of specific days where there's going to be a move, a significant move, given that it's a red folder. So using that idea that this time, right, let's use this red box, that at this time there's going to be a reason to push price. See how price is behaving before this news event is coming, right? Given the time frame. Now we're on a daily. We know FOMC, and why am I looking at FOMC on a daily chart? Why am I not looking on a 4-hour chart? Because FOMC and interest rates, just from the second lesson of this mentorship, right? What do we know? We know that they are the reasons for the pricing in these markets. So I'm going to, the FOMC is going to dictate where the higher time frames are going to point to. So I want to see how the higher time frame is trading like, given, the run up to this point in time. Now we're under sell side liquidity pool. If we could see some displacement given the FOMC, I'd have these highs in my sights, right? That's how you need to start framing it. Start thinking of the time aspect first. Think of the time. Where is, the times of days I need to consider? Where are they? Where am I right now? All we're doing is moving through time, right? We're moving through time, and what we're doing is this. As we get to the areas that we consider, we're seeing what has price done before, and is it, going to allow me to get in line with my bias? On all time frames, this can be applied, right? Now, if we look at the US 30 year, right, we see we've come down, right? Now, if we could trade above this candle's highs, I'd have these highs as well. Now, given that's the US 30 year, the same gonna apply to the US 10 year as well, right? You see how we had this move down low, so we went a higher high, lower low, higher high. We tested that as a bullish breaker, and we expanded higher, and we took buy side liquidity. Now we're coming back into these down close candles. If we can displace and start taking out candles highs, these singular candles highs, using open high low close theory, then I'm gonna anticipate that we're seeking buy side liquidity, and I'd have these highs in my sights as well. Given that, that's gonna prone the DXY to go higher, right? Uh, for the US 500, have this candle outlined, right? This weekly order block, right? Now, how does interest rates, affect the stock market? Well, interest rates aren't an increase in interest rates is not good for the stock market. It's not good for businesses in general, and that's what the stock market is, right? That's what indices are as well. So the US 500 is the top 500 tech companies, right? It makes it more expensive for them to borrow capital, which is not good for business. And when interest rates occur, investors are risk off, and you'll see that translate into lower prices in the S&P and usually higher prices in the dollar, right? So have this marked out. There's a run on this candle's high that can be offered into this order block, and then finding rejection here, we can start seeing the move back down, right? Consider this, this gap in price here. And just looking at my notes, that's pretty much it. There is a video that I will probably upload after this. There was a 5 minute, a part of a market maker buy model that I was giving to someone in the chat, and I'll run you lot through it collectively here after I upload this video on the reasons why, right? So that's all for the video. I know there wasn't a specific thing, because the last two, this weekly comp trend, the one before this one, we've been emphasizing the wait for FOMC. Now, this is just a time in the market where it's low probability, right? The conditions are not ripe for, you know, actively, intensively trading. It's more of a time of preserving your capital whilst you have it if you are funded or if you have capital that you are trading. Preserving capital and knowing when to, actively seek being a participant with live funds, that is the difference between a someone that is well versed in trading and someone that is merely gambling and trying to make a quick flip, right? There is longevity that you need to, consider in this game. And knowing when to switch from live funds to a demo fake account is very good. Now, why trade to the demo and a paper account? Why not just completely not care about the market? Because you'd still want to participate and still want to, refine yourself and practice your read on price, even though it's not a live setting, right? That's the reason I recommended it. And I recommended it 2 weeks ago from making this on my Snapchat story. So that's pretty much it for this week. Now, just a recap, there's been 23,000 or 24,000 shorts added to Euro USD. There's been a sweep of this level. We're in this down close candle. I want to see preferably the push higher on the DXY, right? I'm favoring higher prices than lower prices on the DXY, and for Euro, lower prices than higher prices. I'm waiting for FOMC to pass. Furthermore, I'm waiting for the week, right, to pass because after FOMC, we have the non-farm payroll as well. So consider those two things. Now, this is probably going to be a volatile month in the market, and the reason being is after this week and the next week, we have, the elections beginning for the US economy, and that again is going to bring some interruptions to, the financial markets. So bear that in mind. If you're trading, because there are lots of you on funded accounts, do not entertain anything where you cannot depict a clear bias. This is me trying to protect you, right? There is nothing wrong with switching to a paper account and keeping the sword sharp, right? So that's going to be it for this video. Any questions, like always, make sure you ask me, and that's all. I'll see you guys in the next one.